was an immense short cover rally. The squeeze was on. Anything even resembling high beta caught an absolutely massive bid. Volumes were incredibly strong. You had advanced decliners sitting at around about 8 to 1. The tick index, which means people like you were absolutely hitting the buy button when it did come to the action today. You got the DAC 100 up by almost 2%. The Russell 2K finally finding some love, up by over 2.5%. But at this 1700 level, it isn't necessarily all that rosy, despite the fact that we did get this roaring rally coming through. Interestingly though, with all of that, and we'll explain why that happened in a second, but let's take a look at the futures picture, because this goes to perhaps one of the stocks that we mentioned at the open. The DAC is showing a little bit of negativity coming through, so let's just call that 0.3%, a little bit of pressure coming through for the Dow and the S&P 500, but only marginal, and more likely than not, that is Apple related. But the volatility that we have been seeing in treasuries of late, if you think that there was a short cover rally coming through, when it does come to the market, it pales in comparison to the short cover rally that we have been seeing coming through for the treasury yields. Now, a lot of people might want to be suggesting that this is a Fed-related thing, that this is an economy-related thing, but perhaps the TBAC, the TBAC, the Treasury Advisory Board, has a point, because what they were suggesting when they were determining the QIA refunding announcement is that the supply-demand dynamics has what has been driving yields for the past couple of months. That's why they kept that skew towards the T-bills. And perhaps that's why the 2-year note, when you're talking about the US Treasuries, has basically held the line at around about that 5% mark and not seen that abject volatility that we have been seeing across the curve, particularly when it does come to duration, because that explains that this is more intrinsically linked to Fed expectations when you are talking about that 2-year. But nonetheless, the absolutely rip-roaring run that we have seen, that the buying that we have seen coming through for that 10-year yield now sitting at around about 465, obviously juiced the rally that we did see, the short cover rally in stocks. We had the Goldman short roll index was up by around about 7%. The DXY relatively steady while all of this is happening at around about 106.2. We didn't get any movement coming through from the BOE. We're going to get some more, I suppose, economic data coming through from some of the Euro countries later tonight as well. And importantly, real yields got an absolute beatdown at the same time. So this 2-day session of this pulling in terms of the buying up of duration, the buying up has led to real yields coming in quite considerably, and obviously the equity valuation implications that has. Now, in the Asian session, crude is, let's just call that relatively riding the flat line. We did see uptick coming through around about in the order of 2% in the US session as well. But moving right along, let's take a look at how some of the stocks have been performing, and you're going to be hard-pressed to find anything not in the green today, unless for all you Singaporeans and other people around Asia, myself included, who do enjoy wearing Crocs, they actually got beaten down by 5% on the back of their numbers. So not everything was rewarded today, just keep that in mind. But a lot of things were rewarded. So in terms of a firm, they actually ripped on the back of Amazon, because they're going to be providing the buy now, pay later services for small businesses. Is it worth a 20% pop? Who knows? Nvidia, Microsoft and Tesla all seeing some significant upside. We're going to be talking a little bit about Tesla founder Elon Musk later on in the show, because he's been speaking to the UK Prime Minister Rishi Sunak. We're going to have a big chat about AI. The K-Webs. And see, this is interesting, because a massive beta rally, you would imagine that those China tech stocks would also be the beneficiaries of that on the US side. Wasn't the case. You only saw 1% upside. That's not normal on a day where, you see ARK stocks going up by 7-8% across the portfolio of those ETFs, that you don't necessarily see all that juice coming into China tech as well. So again, keep that in mind about sentimentality when it does go to US sentiment towards some of these stocks. Starbucks ripping by around about 9%. They did beat a lot of numbers. Their China comp sales were better, even though the ticket sizes were smaller. Palantir up by 20%. Even though their government revenue did miss on the estimates, everything else beat. They are expecting far more operating income coming through in the next quarter as well. 20% to the good. Eli Lilly, again, this is the same kind of thematic. Anyone that posted good numbers today got even more of an uplift than they normally would, but nonetheless, they're up by around about 4.5%, and they're expecting to up their supply of what everyone's talking about, those obesity drugs, Mounjaro, moving forward, and Shopify ripping by 22%. Same deal. Good enough numbers and a huge rip to the upside, anything that had previously been shorted. But the big news today is, of course, Apple. They didn't get any love in the after hours, though. They were up by around about 2%. So net, they're off by around about 1% in today's action. But it was all about the underlying numbers, despite the fact that some of the top line numbers did beat on expectations. So if we bring up the next one, just to get a little bit of a glimpse of what we did get. Revenue, beat. EPS, beat. Services revenue, B. Greater China. We saw that miss there. Now they're saying that the iPhone sales in China for September quarter were pretty all right, that it was iPads and the Macs that was weak in terms of the performance of the sales there. The Q1 guide also disappointed some people in the market because it's going to be like for like what we did see in Q1 last year. But what is interesting in all of this is if everything that they're saying is true and it's the iMacs and the iPads that are struggling, are people going to start buying them with those new M3 chips?